When it comes to Africa's consumer market, it's probably one of the most misunderstood on the entire planet. So in this explainer, we're going to push past all those old, outdated stories and show you where the real, tangible opportunities are hiding for anyone who's willing to take a closer look. So let's just dive right in with the big question you see here. A lot of the conventional wisdom, the stuff you hear about Africa's market, is either stuck in the past or, let's be honest, just plain wrong. It's time we challenge some of those assumptions.
Okay, first up, let's tackle this huge misconception about development. Now, it's true, large parts of the continent are rural, but the story on the ground is so much more complex and, frankly, a lot more interesting.
Right. So the old story is that these rural areas are just disconnected wastelands. But that's not the picture at all. The reality is they often have digital connectivity, they have strong communal structures, local businesses. The thing is, they're not disconnected, they're just waiting for the right kind of large-scale investment that local towns just can't fund themselves.
And this quote really hits the nail on the head. The real opportunity isn't in flashy short-term projects like another luxury hotel. No, it's about the fundamental building blocks of a modern economy, the kinds of things that create real, lasting value.
So what is realistic infrastructure? Well, take a look. We're not talking about speculative gambles. We're talking about essential services, things like water pipes, electricity, public transport, and healthcare. Local governments are actually opening these projects up to private investors, offering secure, long-term commitments, sometimes for 20, 30, even 50 years. And this is where the story gets really interesting. Because as that foundational infrastructure grows, so does the middle class. And that is completely changing the consumer profile, shifting it away from just basic needs to, well, aspirational wants.
You see it so clearly in countries like South Africa. As more people climb that economic ladder, they're moving from just buying essentials to actually wanting luxury goods. For anyone in marketing, this is huge. It means you have to shift your entire focus from survival to aspiration.
And to give you a sense of just how big this aspiration is, check this out. In a place like Johannesburg's Diamond Walk, a designer handbag isn't just an accessory, it's an asset. We're talking about something that costs as much as a small car. It's a massive status symbol, often bought on credit, all to stand out from the crowd. So you might be wondering, how on earth do brands make this work? Well, it's not as simple as just opening a store. The really smart luxury brands, they adapt. They create these tailored payment plans and flexible credit options that make these incredibly high-status items actually accessible to the local market.
Now, let's talk about something you hear all the time, Africa's youth dividend. It's always framed as this incredible strength, right? And it is. But for businesses trying to connect with this demographic, well, it's a bit of a paradox.
I mean, just look at that number, 60%. It's absolutely staggering. On paper, that's a dream demographic, right? A huge, fertile ground for new ideas and trends. But what does that actually mean when you're trying to build a brand that lasts?
Well, here's the flip side. That incredible potential comes with some serious challenges. Super low brand loyalty, not a lot of access to credit, and attention spans that are, let's be honest, incredibly short. Gen Z and Gen Alpha think about money and savings in a completely different way, which makes them a really tough nut to crack long-term.
This case study on the Dickies brand is a perfect example. Globally, everyone knows it as a tough, durable workman's brand. But in South Africa, youth culture completely transformed it into a nostalgic streetwear icon. It just goes to show you have to toss your global playbook right out the window and really listen to the unique perspective of the local youth.
All right, next up, we need to talk about the very structure of the economy itself. To succeed here, you have to get that business operates on two parallel tracks. The formal one you probably know, and an informal one that is every bit as powerful.
We're talking about the informal economy. And I want to be super clear here. Don't confuse this with the illegal or illicit economy. That is not what this is. This is a legitimate system of street hawkers and local tuck shops, with its own formalized supply chains that have, in many cases, been running for generations.
This story is a great example. There was a snack brand from Southeast Asia that was just failing in the formal grocery stores. And then they had this aha moment. They realized that snacks are mostly sold through the informal economy. So they partner with these tuck shops, price themselves competitively, and boom, massive market penetration. The lesson here, if you ignore this channel, you are leaving a huge amount of money on the table, period.
Finally, let's dig into what is maybe the single most important factor driving almost every single purchase decision on the continent, no matter the income level. And that is
price.
Consumers here are incredibly price sensitive. I mean, a tiny shift in disposable income, we're talking as little as $5 or $10 a month, can completely alter a person's buying habits. And why is that? Because everyone is acutely aware of how easily they could slip down that economic ladder.
And this is where it gets really interesting, because that price sensitivity creates this fascinating paradox. You'll often find that a middle-class consumer is actually more willing to take on debt for a status symbol than a high-net-worth individual who, frankly, feels like they have less to prove. Understanding these deep psychological drivers is absolutely key.
So, after all that, what's the actual playbook here? What are the key takeaways for anyone who wants to succeed? It really boils down to this. Focus on that realistic infrastructure. Adapt your pricing for the new aspirational consumer. Get your head around the youth paradox. You've got to leverage the informal economy, and you have to master the nuances of price. But above all, the golden rule, the one you absolutely cannot forget, is this. You cannot just copy and paste your strategy from back home and expect it to work here. It won't.
And that really leaves us with one final thought. Look, the easy path is just to replicate what you already know. But real, lasting success in Africa requires a much deeper, a more tailored, and a far more strategic approach. The real question is, are you ready to do that hard work? Because that's what wins.